Cool. So we are live. Right. So today is a US bank holiday, so it's just basically an extended weekend. But nonetheless, we'll be looking on the high time frames. So yeah, it's obviously liquidation, post liquidation events, and yeah, for anybody who was negatively affected, really sorry to hear it. If that is the case. Um, and yeah, it's a shit one because thanks for, I think it was Victor who shared that link for that Twitter post about it wasn't a USDE pig, it was a Binance D pig. And yeah, so it shouldn't have happened, right? Um, but then again, Binance are refunding those people who were liquidated. I saw Barbit only went down to like 0.95, so that's nothing too hectic in crypto. Um, but yeah, just it's not just the people who got liquidated. It's if I can speak to my own experience, I mean, I remember Solana going down to like $7, and I was watching that entire thing. I mean, back then I was in two positions, Bitcoin and Solana, and Solana was basically my first and only 10x, riding it from like 20 to 280, and yeah, that was gut wrenching. I mean, I held that thing all the way to 280, all the way down, and made some silly decisions at the lows, which affected me in the end. But that's acting out of emotion. It was my canon event for getting serious about trading, and yeah, it led me to learning what I know about trading, what I know today. But I still would have liked to have been holding on to that Solana I had back then. I did get back in. I think I sold at like 14, and then then I bought back in at I think it was like 20 something, 20, 30, something like that. But it wasn't with the size I had before. I was once bitten, twice shy. And Solana was always my original thesis. So, but yeah, my point is it's the emotions, right? So that's why when I woke up on Saturday and saw the shitstorm that had happened, I was like, fuck, let me go check my spot margin account. I mean, my spot margin account is usually never over 10% of that maintenance margin and so on. But nonetheless, when you see things dropping like they did, I thought, fuck, have I been liquidated? And obviously wasn't. Holding things like basically just Ethereum, Link, checks obviously isn't on Barbit. So, so yeah, I was really grateful to have not gone through that, because if I was awake during that, who knows? Yeah, I mean, I like to think that I would have been buying the bottom with all the stables I have, but the reality is there was no liquidity in any case, so there's nobody that even caught those lows. And that kind of leads me on to the point I want to make, is that these wicks. Okay, let's just ignore Ethereum for a moment and just this kind of stuff over here is just look. The positive is that we've wiped out all the sell side liquidity, which is bullish. Link's. I mean, Link went down to 8. Okay, that's nothing. That's not too crazy compared to some of the things we saw like on Atom and so on. But nonetheless, we have swept out all the sell side liquidity, and we've closed above all of it. So if you just were to say, for example, that this chart actually did what it's done, but it took months to get there, I'd be bullish at the lows here, right? Once it swept this liquidity. So the fact that we got this huge wick is it's not a true representation of what actually went down, because this is not this has happened because of that Binance DPEG, right? But a lot of people weren't able to get in there, so it's not like we missed the bottom. But nonetheless, all the sell side liquidity has been taken out. So what do we have? Like, what else is there? Well, I mean, there's this range over here, but that was like a year's worth of range, which I don't believe we'll go back to for something like Link. So with that in mind, looking at this range out of this original consolidation, this is just a big range. We've now swept the range low. So what do we have above us? We've just got buy side liquidity, and of course these highs here, which are not something to discuss at this point. So for the time being, you can just look at this immediate range that we're working within, and we've just swept the lows. Simple as that. If you remove the emotion and the idea that crypto is over and this and that, and you just look at it for what it is, well, we've just swept the range low, and we've closed back inside the range. In fact, if you want to look at this entire thing as a range, you divide it and look at that, right? So we are sitting currently at the 50%. So the way I'm looking at these markets, and I've highlighted a few that I'm looking at, is really simple. Once we close above, you can use this level, but just kind of for the time being. Once you close above that, say it does this, right? So whether it does this first and then that, or whatever it is, once, then we have to it's a different story if we go down first, right? Because there's different levels we can use. But let's just say, for argument's sake, that we do get a V-shaped recovery. Then that's just how I'll trade us. Once we get a close above that, I'll just fucking send it. Because as far as I'm concerned, once we close above that, you've now swept sell-side liquidity. Now you got to change the state of delivery, which is a confirmation model, low time frame confirmation model that price is in fact, continuing in the way that your bias is, right? And what bias do we have? Well, it's bullish simply because we've swept these lows. Now, I'm not saying it's going to do that immediately, if at all, because the thing is, it's in resistance. Right, this is currently resistance. And in addition to that, we also got the quarterly open, right? And that is something that we can look at when you look at something like Ethereum. Ethereum is sitting at that quarterly open. But look, let's focus on Ethereum, right? Because Ethereum at the end of the day is what I'm mega bullish on. It's what I've been using for my bias, and quite frankly, nothing's changed. I mean, the analysis I did last week, both of them, nothing's changed except for the fact that we've now dropped into the yearly open. We've dropped into this monthly fair value gap, and when looking at the 4-hour, or actually the daily, since we're on the monthly, we're now closing above that quarterly open. So this is the range that we're working in, and I like the fact that we've expanded lower and we've been met with expansion. I guess you could maybe argue that this is just a retracement, since the fact that we've had this kind of bounce over here, and it's just, that's where price then reopened, or opened since after that close. So yeah, we'll have to see how it plays out. But for me, it's pretty simple. You've now got this range that we're working within, which is this low, and I'll probably use this candle here for something like Ethereum, but let's call it that, right? So right now you're just sitting in this big ass range, and we're sitting in the middle. So right now there's nothing actually to do. I bought a little bit of Link, and I think a bit of Ethereum with whatever stables I had on Saturday morning. Well, not whatever stables I had. I just had a couple. I was moving my wallets around and things like that, and I bought a few percent worth. But I mean, nothing's really changed for me, right? So my portfolio was the long-term investment one. I was only down 10% when I woke up on Saturday. So really, there was nothing really for me to do. So I'm still sitting and waiting. But again, it's the same story here. Look, all you've done is dropped into this range. You've swept the sell-side liquidity. You've tapped the yearly open, which is what you really want. Because bearing in mind, the whole point of trading this yearly or this monthly unicorn is off the time level of the yearly open. Because I expect the yearly candle to expand. So this is currently the yearly candle. And that wick went all the way down to the bottom, previous yearly low, etc. And now we've retested that yearly open level, which is what you want to see. This is how it typically works with these power of theory, is that you open, right? Let me just get this on. You open, you consolidate around the yearly open, you drop lower to make the wick, and then you expand. Right, there was that first retest, going sideways, bam, retest again. If we get continuation from this and with that confirmation here, I expect that yearly candle to continue to expand. Alternatively, if that yearly candle, say for example, closes somewhere around here, right? As long as it closes above that yearly open, quite frankly, as long as it closes, maybe above these levels, the body that is, then I expect the following candle to expand as well. And it will be a lot bigger as well, because look at the size of this wick. That's a massive wick. So when there's a huge range, it's difficult for the candle to expand because it's already taken out basically its entire, I mean, look at the range that this this asset has, right? Let me just go back to the daily. I mean, we basically did most of this. In fact, we've done the entire range, okay, just minusing that. Over the last few years, we've done that entire range in a single year. So if you just think about time and the formation of candles, if we even had to go sideways or stayed within this range until the yearly open, and then dropped lower, swept some sell-side liquidity, even if we dropped and swept this liquidity again, for example, made the wick of the new yearly open, I'd expect massive expansion, because when you have small wicks, you have more of the body to expand because you've done less of the range to form the wick. So yeah, in terms of what comes next, it's pretty difficult to say. Of course, today is that US bank holiday, so I don't read too much into it. It's just a long weekend. But again, if you just keep it mechanical, right? We've swept the sell-side liquidity of this range. Now we just need to look for confirmation that we are in fact going to continue in the high time frame trend. So the first signal would be an inversion of this fair value gap. We've already kind of started to, we bounced off the yearly open grade. Quarterly open, we've closed above that, so we're getting a little bit of support there. Look at that, right on the, sorry, wrong one. Yeah, that's the previous yearly high. Right over here, right, is the quarterly open. So that's one little confirmation, right? That's what you want to see. The second thing is inverting that. And then the third and final would actually be this, given it's the last down close candle. So you close above that, that should change in the state of delivery, and I expect continuation, because ultimately this is what I'm trading, this monthly unicorn. So yeah, we've tapped into that pivot gap. We've got this entire breaker block of supports. We've tapped into the yearly open. As far as I'm concerned, this is still bullish. It's just on a monthly time frame. So, I mean, we've got 2 more months after this, which we could very well see this asset just go sideways. And then imagine the new yearly open candle trades lower, sweeps the previous quarterly low, and then bam. I mean, we're on a monthly chart here. You've got to allow it to just sit. And if we do just consolidate within this quarterly range, because maybe there's a hangover with the crypto markets, perhaps that's the case. So be it. It's just difficult to say what's going to happen next because of obviously what happened. So yeah, and I mean, again, if you look at this on the weekly, fuck, that's bullish. The only thing is typically with these wicks, and again, it's difficult to read into these wicks because of what happened, but nonetheless, just keeping it purely technical, you'd expect this wick at least 0.2 or 0.5 to be rebalanced, because wicks are just inefficiencies. So yeah, maybe we do get rejected here on the lower time frames and drop lower, and you'd want to see that 0.5 of this wick hold. You don't want to see this wick. You don't want to see the price coming down here. There'll be pain. I'm not going to be bullish if price comes down here. I would have to wait for a lot more confirmation. So yeah, I want to see at least the 0.5, 0.25 or 0.5, or at most I should say 0.5. And if that is the case, right, let's just clean this up a bit. So if we do come to that 0.5, we would have then that old level over there. So this is still the weekly order block. I would prefer it if we actually bounced at the 0.25, and the reason I say that, if that's the case, we would then create a swing low on the weekly. So it pops down here. You know, any candle, any wick that forms higher than this will become a swing low. Oh, actually, I missed that one there. You've got, oops. Yeah. So, yeah, with this next week, if we can just sit around, maybe come back lower to that 0.5, that 0.2 or 0.5, we will then form a swing low on the weekly, which, considering where we're at in the monthly, you know, reacting out of this monthly fair value gap and the yearly open, now the weekly is forming a swing low. Typically speaking, what comes next is, you know, with the third candle, we can, if it makes a low here, we can even expect the third candle to expand. The third or fourth candle, right? Because, you know, like I was saying, as per T-Trades, market reverses, you need a swing low and SMT. So, yeah, I've got no doubt we've got SMT here with Bitcoin. Let's have a look. Yeah, so there was SMT already. So Bitcoin's come and swept. Okay, so Bitcoin swept. That's interesting. Bitcoin has hit this level. If you look directly up, so technically speaking, Ethereum's actually come down to this level over here. Bullish. And if you look at this range, we've respected the 0.5. Even if you use this range, we've dipped into this discounts. I'd probably think this is probably better to use. So again, bullish. There's no reason to be bearish as it stands. So yeah, let's see what the weekly does. It's a short week, of course, with the US bank holiday today. Also, it's PPR, inflation data, stuff like that, but it's all tentative because the US shut down. And of course, we've got NASDAQ to consider. So, but let's just keep our focus here. So, okay, so we can anticipate potentially this weekly candle. I would like to see it just dip into this level over here. Let's just see what those levels are on the lower time frames. See that 0.25 is quite nice. Because when you look at this in the far, you've just ignore this work, right? Yeah, you've swept this liquidity here. You've got the change in the state delivery, and now you're sitting around here. If we do pull back and come into this 0.5, there's your balanced price range. If we can get a bounce there and continue higher, especially if you're looking at this in the 4 hour, that would be the first point. This is the daily change in the state delivery. This is the 4 hour. So if we get a scenario like this, right, we've expanded. And what I like about looking at those charts, I mean, if anyone's been watching my videos for long enough, take a guess at what I can see. Original consolidation. I see low resistance liquidity, and I see inefficiencies. There's one of two, if not both, reasons the market is moving at any given point, and it's for liquidity and rebalancing inefficiencies, and we have both. Telltale signs of the accumulation side of a market maker buy model. So right now we got buy side liquidity in the form of bar stops resting above these swing highs, right? And we've got these inefficiencies. Secondly, okay, so that's right now as it stands, and we've also swept previous monthly low over here. Yeah, previous monthly low. Okay, so let's just pop that on the chart. Previous monthly low. Nice and bold. Pop it up. Okay, so, and of course this is the previous monthly high. Okay, so let's just clean this up a bit. And I like the fact that this wick, look, the 0.5 has been respected. Yes, the wicks did a bit of damage, but the body's still the narrative. Okay, so we're going to just clean this up a bit. Okay, so there's that 0.5. The price retraces into the zone. I don't particularly want to see it come this low, but if it does, there's that support. Okay, so in terms of market phases, right, we've expanded and we've just been met with expansion. So expansion met with expansion is typically a reversal, and that's why you can see a big wick here. So if we can get this type of scenario, right, we're sitting here going sideways. The only shit thing is that this is a weekend. Look, this is a Saturday low. Weekends are typically swept at some points, but doesn't mean it has to be now. So sticking with the bullish narrative, right? So we've got this consolidation going sideways. If we can pull back Monday, if we can just kind of sit on Monday, Tuesday sweep Monday's low into this Fibonacci gap, maybe tap that level, go up in the fall, thinking this close above this, then we're in business. Then I'd say, cool, guys, there's a higher probability that we're going to sweep this. And what do we have? The distribution side of the market maker model. And then prices up here, and then it goes, oh, fuck, you know, I wish I'd bought, I thought it was over, max pain, right? So looking at this chart, I just see the accumulation side of the market maker model. What is the accumulation side? Well, it's the market makers accumulating long positions. They're absorbing the sell side liquidity in these areas here. They absorb it here, which is why price is stabilized in a range. They do not absorb sell side liquidity. They just allow the market to sell off. They do not absorb it. That's why you get these inefficiencies, right? The sell side imbalance. They absorb it here, sell side imbalance. So yeah, I'd like to see price drop a little lower or even expand. That would just be just as good. Close above this, consolidate, expand. You know, once we close above this in the file, then it's, yeah, I'm going to be targeting these highs. And then that's the real market maker model. Of course, this where we are now on this, let's just pull up the weekly. I think this is using the New York. Okay, so yeah, that's we had the weekly open, perfect. So we drop lower, that's then us forming that wick of the weekly into the 0.25 to rebalance this massive liquidation wick. We've got a support in the form of the fair value gap, also this balanced price range. So plenty of support for us to bounce. If we can do this, close back above here, retest that weekly open, confirm the wick, close above this, bam. Change the state of delivery, let's fucking send it. I mean, this technically would be the change in the state of delivery, this over here, the close above, after this sweep, but we have this candle. However, you have rebalanced 0.25 of this, and I think we also did okay, so we didn't actually get to the 0.5, which is great. We don't want to see price being heavy. We're going to stay in the upper half. In fact, we've respected the upper quarter. And yeah, okay, so that's cool. So we rebalanced some of this wick. We've swept some of this liquidity, changed that delivery. It's technically that if you want to just ignore this wick. Obviously, this is unprecedented times, right? I mean, look, this isn't the craziest price action we've ever seen, but on other work, we know the backdrop as to why this has happened. So just trying to stay objective, right? We've rebalanced some of this work. Great, we have. Great. So we've also swept some liquidity, changed state delivery. We're now above the previous yearly high. We are currently sitting at the weekly open. If we drop low now, fantastic. We make the wick for the weekly, get above this level over here. Because if we do, this low that is made down here on this wick, that will then become the protected low. That would be the weekly low. And then that's where you can actually put your stop losses for trading from this point. This will be your new change data delivery. This is what we were really looking for. And this is that master fair value gap always referred to, right? This over here. As we get above that, it's a pretty high probability for me that we're going to come trade higher to this. So yeah, pretty fucking bullish. I'm bullish. I mean, I can't be anything but bullish because there's nothing left to take on the way down. There's maybe late longers, well, not late longers, but early longers, you know what I mean? Fuck. I don't know. So yeah, currently as it stands, I think this is pretty bullish. We'll see how it goes. But with that in mind, there's a whole bunch of other charts that have, for example, there's a few that are really, really, let's do this. So one of them I really, really like is C-Pool. Look at this. You swept the previous monthly low. You've got all this low resistance liquidity. You got all these inefficiencies. We currently got rejected at the quarterly open. But again, this is what I'm saying. This is so clean. When we get above that, bam, just fucking trade it to this point. Or above if you're really, really bullish. But that's fuck. I mean, look at this thing. It's trending all the way down in a huge range. You swept that range low. You then say, great, what's on the left here? Well, I'll just see accumulation side of the market maker curve. Look at this low resistance liquidity. Never trade against equal highs and low resistance liquidity. You would usually lose. You swept the previous month low, there's a previous month high, and it's equal highs with this low resistance liquidity. This is such a clear such a clear line in the sand. Get above this, close above that, you just trade straight up to this point because this is not the distribution side of this market maker model. That's a fucking bullish chart. Another chart that's probably the most bullish chart I've seen. It's not on low. It's Tau. Betensa. I mean, this thing, holy fuck. So you've swept the, I don't know what's before that. I know there is price action, but nonetheless, looking back till a year ago, you've swept all that liquidity. It's crazy. I mean, I remember this low here. I hesitated on this entry over here. Once we closed above at that point over there, I didn't enter because I was like, oh, fuck evil lows. Like, I'm not going to trade against that. And I lost out on this entire move. This is something I've been trying to get into for fucking ages. And when I woke up on Saturday, this was the alert that went off. Or one of the alerts. And I was like, what? It said like Betensa's bar. It also said Sui bar. And I was like, what? That's odd. And I got to the charts. I was like, fuck. So yeah, again, we're just in a huge range here. Look at this. So you've taken out the range low. This is at the quarterly open. Thank God I never really long spot in September. But that's the quarterly open. So when we have an opening level, significant opening level, or whatever, this being a vertical level, and it's in this instance a quarterly open, you've gone down at the open, swept the range lows. It's also fucking bullish because you swept buy side liquidity, then sell side, which is what you call a double purge. That's the market maker trader. And you've then closed above the breaker block. Low, high, low, low break, bam. With the fair value gap at the open. This is one of the most bullish charts. And you've got a shitload. Look at equal highs, relative equal highs, low resistance liquidity, and etc. etc. So I've got my alerts waiting for this price to trade back into this, and I'm going to long this. not financial advice, but if you were to follow my model, you do the same. Also fucking bullish on this project. BitSensor, it's a AI subnet story, blah blah fish based, and it's like proof of work but concepts, and there's only 20, it's got the same tokenomics as Bitcoin, etc. etc. I'm bullish on it. Do your own research, but yeah, so this is low hanging fruit, and if shit really pops off, fuck, you've got yourself a really nice trade there. So yeah, super bullish. Virtuals, same story, although this hasn't been as you know, bouncy, but nonetheless, you've taken out basically, you've taken out all this outside liquidity, and this is just low resistance liquidity, and again, clear line in the sand. Now, once you close above that, yeah, and it'd be fucking bush if we do get that V-shaped recovery, guys. Like, oh my god, fuck yes, that's what you're gonna see. Yeah. And yeah, for anyone who's sitting there like, fuck, this guy must be smoking the socks or whatever it is, I'm going to show you, if anyone's doubting this analysis, I'm not to say my analysis is right, please don't think that. If you think this is nonsense, this thing's going to zero, blah, 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 you're being clouded by emotion. The simple fact is, if we had taken months to get to this point, and then we started showing like signals of bouncing back, you'd be bullish. I mean, you'd have to be bullish. You can't be bearish at support. We have now swept all the available support. There's nothing else to sweep. And I don't see us sweeping these lows because this is artificial. This is not a real, this is, yeah. This happened because the USDE, whatever it is, said it's 0.65. It wasn't. It shouldn't have been. That was just Binance. So, yeah, ignore this. Maybe some of the work gets refilled, rebalanced. But just don't get caught up in saying, "Oh fuck it, it's probably going to go low." It could go low, see that full. And look, I think a lot of tokens are probably never going to recover. I mean, I've been saying this for ages, writing articles about it, being vocal about it. Crypto.com bubble, and it's happened. It didn't happen like I thought it would. I didn't really have an idea. I just thought they were going to wipe it all out, but how it happened is irrelevant. The fact is it was going to happen, and we've now wiped out and we're taking out the trash. Now's the time to focus on utility. CPOL, massive utility. It's a RWA/lending type story. Under RWA, checks. That's all checks. Checks. Massive utility. So why isn't it performing? Well, because this market's just been fucking useless. Not checks. The markets betting on shit coins, meme coins, etc., etc. I really do think this is the shift. This is the paradigm shift. And I mean, at the end of the day, I wrote in that article in Feb saying, well, how can you prepare for this mass extinction? I said, hold a lot of Bitcoin and Ethereum. They're not going anywhere. If you are going to play with the Solana, Ethereum, just accept that it's fair, but accept that there is risk. But if you want to go and put your money in shit coins, you are gambling. It's hard to believe that I was only down 10%. Mostly, I was in a lot of stables, right? To be fair, and I honestly woke up, thought I was fucked, based on how the market looked. I was pretty surprised, but I was just very grateful I followed my own advice. And for anybody who did get cooked or was feeling down, like this is the start. This is the start of Crypto 2.0. I'm telling you. This is where utility is actually where the money's going to flow to. And if I'm correct in my conspiracy, put your tinfoil hat on. I think this was by design, and they've wiped the table clean, and it's basically time to start fresh. So yeah, I really do think this is the start of the bull market, the real bull market, and I really do think this is the low, but it's not the last low if you're if you're not in the right stuff. Anyway, so that's the rant there. What else to look at? Link, obviously, for its fundamentals, super bullish. Same story, right? Once we get above this level, I'm going to start really getting interested again. And above this level would be your clear line in the sand. And look, I think if we can on this e-liquid day with the US Bank holiday get above this, fucking awesome. The rest of the week will probably be bullish, given that we've then created the wick on the weekly. But it has to come with that confirmation. I mean, if we get that, if that's the weekly wick, fucking, and we get this confirmation close above there, fucking bullish. Just imagine how you'll feel if you sold everything and then prices here in like a week's time. Because if you were to be bullish in quarter four, what would you want to happen in the first part? You would want to see sell side liquidity taken out. And that's exactly what's happened. So Asta is a 0.25. This has got a lot of work to do to close bullish on the daily. But also a clear line in the sand here. Nice thing is, look at this. This thing's already inverted. It's 4 hour. Look at that. Bam. So look, inversions are not reversal patterns. This is something I've had to learn. Inversions were my main lower time frame entry model. Still love them to bits. But it's a change in the state of delivery that is the most consistent and most reliable. This is still an order block. That's the problem. See, so an inversion here, your bias has to be correct, because you could still close above this and be wrong because you're sitting in a massive order block. Whereas a change in the state of delivery, it encompasses everything. You would have a breaker block, an inversion, a blah blah fish based. A change in state of delivery encapsulates it all, and it's just easy, consistent. So there is the first sign. If maybe you drop down to the 1 hour, you get no. So 1 hour is still there. Yeah, this is just a little market maker model. What else? If you look at things like HAP. Oh yeah, I just want to point out Jupe. I mean, this thing's got utility. It's just, I'm dumbfounded how shit this price action has been on this asset. I mean, this is along with Pith, for example, was when I started moving out of Bitcoin in 2020, this March 2024, expecting altcoin season, which we got. I ran this shit up from the lows all the way to the highs, same with Pith. And I was like, okay, well, in March, I remember that. So I was like, I remember this. It's my daughter's birthday and around here, and we're making highs, and it was her birthday on this weekend, and I was like, screenshotting shirts, you know, look at me, 5x, blah, blah, blah. And I thought, fuck, maybe we should sell. I was like, no, bro, this is the start of the fucking altcoin season, man. What do you mean? Like, this is what you hold on for 20 exits here. Come on. That was obviously the top. But the fact of the matter is, this is so much utility. Go use Jupiter. I mean, how often do we use Jupiter? I mean, a lot of the time you're using it, even if you're using phantom wallets and for swaps and so on and so forth. This is actual utility. This is actual DeFi. So you've now swept all the liquidity, and a close above that is fucking bullish. Where else do you go from here other than up? You know what I mean? Harp, I mean, fuck. I went to Harp, I looked, I mean, I was like, this is where I'll accumulate. And prices went, wham. I'll probably never get into this asset again, fuck. But yeah, also bullish, close above this. And yeah, I expect these highs to get taken. So yeah, guys, that's the analysis. Let me just check what else. Solana, I'm still unsure about this asset for ETF, etc., etc. Although if the ETF gets launched, I suppose nobody was able to purchase the shit. I don't know. Maybe, I don't know. I just don't know about this. I still think we come down lower for Solana for ETFs to accumulate before this thing does some crazy gains. Could be wrong, but yeah, it is what it is. Can't win them all. We'll just have a quick laugh at this one. I see this had already sold off before. What was happening? I think I saw some posts. Yeah, so before the tweet even happened, people were already selling. And then the tweet happened here. Crazy. Right, guys, so that's the analysis.